All right. When you start diving into investing, you're going to hear the term blue chip a lot. People talk about them like they're the gold standard, reliable, safe, dominant. But what does that actually mean? And seriously, where did a name like blue chip even come from? Well, that's what we're going to break down today.
So, let's tackle that name first. Blue chip. It sounds like something straight out of Wall Street, right? You'd think it was coined on a chaotic trading floor, but you'd be wrong. The real origin story is, well, from a totally different kind of table.
Yep, it comes straight from the game of poker. In a classic poker set, you have your white chips, your red chips, and then you have the blue chips, and those are always the most valuable ones. So, the stock market just kind of borrowed the term. It's a perfect fit, right? It's their way of pointing to the most valuable, most reliable companies out there. Basically, the biggest players in the whole game.
Okay, so what does it actually take for a company to earn that elite blue chip title? It's not just about being big. There's this unofficial list of rules, like a checklist. We're going to go through the 7 big ones that a company really needs to check off to be in the club.
Rule number 1, they need a proven track record of success. And I'm not talking about having a couple of good quarters. No. We're talking about a long history of being profitable. They've shown they can make money consistently, whether the economy is booming or in a slump. They're like the marathon runners of the business world, not the sprinters. Second on the list, rock-solid financial fundamentals. I mean, if you actually dig into their annual reports, you'll see just how healthy they are. It's almost like they make turning a profit look easy. There are no real signs of struggle or panic. It's just solid, predictable financial strength.
Number 3, they have to be old and well-established. We're not talking about the latest hot tech startup here. These are the companies that have been around for ages. They're household names for a reason, right? They spent decades, sometimes over a century, building their reputation and earning our trust. You mentioned Nestlé? Exactly. It feels like they've been around forever. And that brings us to rule number 4, continuous, reliable profits. This is a huge one. It is so rare for a blue chip company to actually post a loss. And look, even if they do hit a rough patch, because hey, things happen, their business model is so strong and resilient that they can usually take the hit, absorb the shock, and get right back on their feet in no time.
There's this great quote that really sums up their mindset. Training is always done in peacetime, not on the battlefield. And that's exactly how these companies operate. They don't wait for a recession or a crisis to figure things out. They use the good times, the peacetime, to build up their strength, to fine-tune their operations, and to make contingency plans. That way, when the economic battlefield gets chaotic, they're already prepared.
All right, number 5 is all about having a dominant market position. These companies aren't just in the industry, they are the industry, or at least a huge part of it. They're the market leaders, the big fish. Often they're part of this small, exclusive club of companies that basically run the whole sector.
Coming in at number 6 is something investors absolutely love: a history of consistent dividends. This is a big deal. It means that year after year, even when times are tough, these companies have a reputation for sharing a piece of their profits directly with their shareholders. It's like a thank you note, but with cash. And more importantly, it's a huge signal of just how financially stable they are.
And the last rule, number 7, is about rapid recovery. Now let's be super clear here. Their stock prices will go down in a big market crash. They're not immune. But the key difference is how they recover. Because the underlying business is so incredibly strong, they're almost always among the very first to bounce back when the market starts to climb again.
So after hearing all that, you might be thinking, wow, these sound amazing. Why wouldn't I just put all my money into blue chips? And that's a great question. But there's a catch. This brings us to what we could call the investor's dilemma. It's that classic trade-off, the whole slow and steady wins the race idea. But does it always?
So here's the breakdown. On the one hand, the pros are exactly what we've been talking about. You get that incredible stability and safety, you get those consistent dividend checks, and they recover quickly. But on the other hand, there are 2 pretty big cons you have to think about: the potential for much slower growth and the fact that they can often be, well, overpriced.
Let's dive into that growth problem first. Think about it. A small, young company has a ton of room to grow. It could double, triple, or even grow 10 times its size. But a blue chip company, it's already a giant. It's like an aircraft carrier. How do you double the size of an aircraft carrier? It's just really, really hard. So their growth isn't going to be explosive, it's going to be slow and steady.
And what about that second problem, being overpriced? Well, it's a simple case of supply and demand. Everybody knows these companies are safe bets, so everybody wants a piece of them. That high demand can push the price of their stock way up.
Sometimes it gets so high that you end up paying more for the stock than the underlying company's actually worth. It's like paying a premium for peace of mind.
Okay, enough with the theory. Let's make this real. How about we look at some actual examples? We're going to take a look at some of the companies on the Pakistan Stock Exchange that a lot of people would point to as fitting that blue chip profile.
And here you go. You're probably recognizing a lot of these names, right? They're everywhere. And notice how they cover all the really critical parts of the economy. You've got energy giants like OGDC and PSO, consumer goods we all use from Nestlé and Unilever, and the big banks like Habib Bank. This kind of diversity is exactly what you'd expect to see. These are the companies that form the backbone of the economy.
Now I have to stop here and say something really, really important. This is not me giving you investment advice. This is just a list of examples. It is absolutely crucial that you do your own research. You have to be the one to look at a company's financials and decide for yourself, is this business truly strong? And just as important, is its stock priced fairly right now?
So, there you have it. We've gone through what blue chips are, why they're so respected, and the pros and cons of investing in them. Now the ball is in your court. It all comes down to one question. What's your next move? You've got the blueprint now. You know what to look for in one of these market giants. So the real question you have to ask yourself is, how does this fit with my financial plan? Are you the kind of person who wants that slow and steady safety in your portfolio? Or are you maybe aiming for a different kind of growth altogether? There's no right answer, of course. The choice is yours. Thanks so much for tuning in.